Flattish outside of the Dow, where Boeing is really helping, about even on the advanced decline line. Let's call it an indeterminate open. Look at the sectors. Industrials bouncing back, and I don't mean just Boeing, your Caterpillars. The railroads are bouncing back as well. Energy doing a little better after a terrible pacing yesterday, generally with the oil prices down notably. Consumer staples has been holding up well. Emerging markets still trying to find some kind of bottom there. Just show you the industrials here. Caterpillar is bouncing nicely. The railroads like Union Pacific, Norfolk Southern, United Rentals are doing a little bit better too. That's another stock that's been terrible. So some of these stocks are trying to find a bottom. The three main ETFs I mentioned yesterday, and I think the ones to watch, your semiconductor, we had very heavy volume on the upside in the semis. Obviously, you're down today with what's going on with ST Micro and, of course, with Texas Instruments. ITB, the home builder, some of the biggest volume in 2 years yesterday on the upside. And the bank stock, the KBE, I think we had the biggest volume in 3 years in that ETF. And that was all upside buying. The volume was going up as the prices were going up. On that, I think watch those for signs of bottom. On the earnings, just look at the numbers. It's a very mixed day here. Boeing, of course, great one, and they increased their full-year forecast. AT&T, you heard from David, short on earnings, beat on revenues. Full-year earnings at the high end of the range, but still not good enough. United Parcel Service beat, but revenues were short. Raised free cash flow guidance, still down a little bit. That's not a bad report. Texas Instruments, that is a little bit of a concern there, and that raises a real question about the slowdown. How real is this slowdown concerns? I don't see a lot of it. Texas Instruments is a little bit of a concern because I think you could say the way they phrase this, customers seem to be bracing for weaker demand. That's definitely a slowing demand story. The Eurozone PMI, that's another little data point. The numbers came out this morning, 52 and change. That was the lowest in 25 months. If you see the comment from the people who put this together, this is market. The slowdown in Europe is being led by a drop in exports linked to trade wars and tariffs, which appears to have darkened the global economic environment and led to increased risk aversion. Well, there it is. That pretty much lays it out. So the question is, what's going to calm the markets down? The two things, there are a number of factors, but the two things really moving the market right now is China slowing and tariffs and rising rates. And I think there's a couple things that need to happen. Number one, the markets need to believe a few things. It has to believe that the 10-year yield is not going to rise dramatically more. I've heard people talk about 3.5% perhaps. There's no clear definition, but not rise dramatically much more. The second is the market has to believe the Fed is not going to be as hawkish as traders have come to believe. That taking out the word accommodate them does not mean that the Fed will keep raising rates into infinity, and they'll certainly not accelerate their gradual path to rate hikes. I think those are the two things that have to happen. Meantime, the bulls are arguing, stop panicking here, that beyond housing, modestly higher rates are not a huge drag on the economy. You're going to hear a lot more about this, I think, in the following week. Rates rising, yes, but the financial conditions are not tight. We're acting like suddenly the Fed is dramatically tight, and it's not tight right now. And that the economy is strong but not overheating. In other words, the Fed is not going to overreact, and people are sort of getting a little bit ahead of the skis here. I don't know if this is going to happen or not, but very clearly we're getting some pushback from the polls, and we saw that yesterday with people trying to buy those beaten-up sectors. Again, watch the home building, ITB, and watch what's going on in the bank sector, KBE. Those are going to be the keys to the market. Right now, the Dow's up 62 points, but that's an outlier because of Boeing. The S&P down 2 points.